Welcome to TheoTRADE. This is Don Kaufman. November 7th, 2025. Just about 35 minutes to go. It's the cash close here on this Friday afternoon. S&P is down some 22 handles, but we are way off the lows of this trading session. This has been a pretty spectacular week in terms of volatility. Now, I know not everybody necessarily loves this, but this is going to be an absolutely critical TheoTRADE weekend update because what you're seeing right now, kind of get that feeling like nowhere to hide. But the real unwind in this marketplace, it hasn't even begun yet. Let me explain. Let's get right into it here as we look at the future. So S&Ps are down 18. We're a very news-driven marketplace right now. There was a discussion off some of these lows. There was discussion about the government reopening. Maybe they're a little closer to the deal. Maybe they're not. The bottom line is, though, there's negotiations going on, and the marketplace kind of buys into it right now. The government's probably going to reopen, maybe throughout the course of this weekend. We'll see. But we rallied off of that news. And that's the bottom line for the rally. But I think you really need to push that aside and get orientation of where we are on the week. This is the SPX, the mother of all products. And where we are on the SPX, well, we are most definitively outside the lower edge of the expected move. You know, there was a point in time earlier in this trading session, we looked like we were actually just going to shatter and keep on going and go for like a full-on 2 standard deviation move. But again, some news broke, the possibility of the government reopening, we rallied back. If we are to continue this rally for the next 30 minutes, I'll tell you right now, we're probably going right around 67.35 inside of the S&Ps. That's the lower edge of the expected move. And we're not too far off it right now. You know, you're 67.09, another 20, 25 points amongst friends in the next 30 minutes can absolutely happen. But there's still some pretty substantial damage that's been inflicted. And I'll tell you, if you kind of, put your ear out there and listen to what's going on, like a lot of retail traders struggling in this. Look, I love volatility, but I know a lot of retail traders are struggling in this because, some of the darlings that have been unscathed, well, I can't necessarily say that anymore. If you take a look at like NVIDIA, that's some real sell side activity. There's no question about it. I mean, this week, if you take a look at, I like to use auto expected moves. And I use auto expected moves because it's what the options marketplace depicts to be forward risk. And what you got to understand about expected move is like the options marketplace are like, wow, they got that one wrong. I mean, NVIDIA literally made a 2 standard deviation move to the downside. It is rebounding right now. There's no question it's rebounding, but there's some damage being inflicted. And one of the points that I was making last weekend, everything else was taking hits last week, every other sector. I spent so much time last weekend going through and I'm like, and take a look at this product. And it was lower edge of expected move. And take a look at obviously, this product and it was lower edge of expected move. And take a look at XLV, which is healthcare. And healthcare was getting hit last week. You know what you saw this week? Okay. The exact opposite. This week, we rotated into almost everything else. I'll start with healthcare. We buy healthcare. We're buying like, energy. Energy. Are you kidding me? Nobody's wanted to touch energy. Energy is like, higher on the week. So we've rotated once again, and yet tech has taken a hit. And I think that this is what's really kind of damaging. And I'm bringing up NVIDIA again. This is kind of damaging retail a little bit. Tesla, which everybody has high hopes, and they passed, the $1 trillion pay package for Elon Musk. Tesla, lower edge of its expected move. Broadcom, okay, big hit outside its expected move. Meta, okay, really big hit, but rebounded huge today. Meta was down dramatically earlier today. It's been rebounding throughout the course of the trading session. Then we bring up Google. Okay, Google, auto expected moves. Okay, this one fared all right, but got scary earlier today. Microsoft, way outside the lower edge of expected move. Okay, Amazon, all right, after having a blistering move, okay, earlier in the week, sells off, but ending relatively flat. And then last but not least, of course, Apple. Well, nobody cares because Apple's not even involved in AI. But the point that I'm trying to make is there's some pretty dramatic hits that were taken inside of some marquee stocks. And this is the first week that I can really point to that. But I want to make very clear and reiterate exactly what I started with. In terms of an unwind in this marketplace, okay, it hasn't yet begun. I don't, you're not even, oh, there's sell side activity and we're oversold. You can be oversold in the near term. Okay, let's actually look like a TheoTRADE RSI Laguerre. Look on the daily, we're oversold over here. And then as soon as you bring up like, of course, a weekly, okay, in a weekly, we're actually overbought. So, you kind of get a feel pretty quick. There's no oversold over here. And I'm actually going to show you that in just a second of why that's so critically important. Why I'm saying, okay, before this is over, if this is the point to where we're really going to start to sell off, there needs to be nowhere to hide, okay? And that unwind that you're starting to see in tech, we're still playing the rotation game. And the rotation game is last week we were selling everything, okay? And last week, while selling everything, hold everything, okay? Last week we sold everything and we bought tech, which brought us to the upper edge of an expected move. This week, okay, we're selling all of the crap and, okay, well, I shouldn't say crap. We're selling big tech and buying all of everything else. And it produced a move outside of expected, okay? So selling crap, everything's crap, okay? I like volatility, so therefore selling crap is everything is crap. But the bottom line is when you start looking at like other sectors, okay, this week, look at stuff like even like XRT today, which is like retail. This thing saw sell side activity earlier in the week, and even that's got a bid back under it. The materials sector is actually flat on the week, and it goes on and on and on. Like I can't stress enough. What really got hit this week, like XLK, okay? People are like, I don't even know what XLK. XLK, okay, is an ETF. Specifically, it's technology sector. You want to see another huge hit? Take a look at like SMH, okay? SMH got fully smoked, okay, this week outside the lower edge of expected move. And the point that I'm trying to make is like stuff like SMH, it hasn't really had, okay, consecutive down days. Well, is this? I think this is probably October 10th. There it is. Yeah, October 10th, there was 1 day of sell side activity. This is consecutive down days. And this is where a lot of people, they're like, okay, so it needed to back off a little bit. Time out for a second. Nothing's backed off. You saw a little sell side activity in tech, but they rotated the marketplace. Okay, you're actually buying some of the financials right now. Who the hell wants to buy financials? You want to own financials? Would you like to get into a lifeboat with Jamie Dimon? I always use that as an example. Because you think about it and you're like, it makes a pretty good point. I would not want to be stuck in a lifeboat with Jamie Dimon. And or like, let's get really crazy. Okay, you want to get in a lifeboat with like Goldman Sachs? This thing didn't really move this week, but you get the point. Those are not good lifeboats to be in. So there's a rotation going on right now. And the real critical part is there's no sign of correlation. And that is a very, very dangerous perspective. I want to show you something that I think is absolutely critical. And this is unequivocally the most important portion of this TheoTRADE kind of weekend update, and that's this. When I say there's nowhere to hide and that the real unwind or real selling hasn't even begun, all you have to do is look, okay, at the S&P 100 advanced decline line. So what do I see in here? Basically, the advanced decline line right now is a 50-50. Okay, there's been no sign of correlation whatsoever. But even more interestingly than this, okay, this is a screenshot. What I'm showing you right now, I literally left a border on here so that you would see it's a screenshot. This is a screenshot from earlier today. Okay, it's November 7th. It's 9 in the morning. That's Mountain Time. But the S&Ps, the reason I took the screenshot, the S&Ps were down exactly 1%. 50-50 advanced decline line. Boom. Why am I pointing that out? Because you ain't even seen selling. Because selling means full-blown correlation. There has to be nowhere to run to, nowhere to hide. There has to be, okay? Otherwise, forget about capitulation. Are you kidding me? We could rally back up right now. We could do a little dance, make a little love. Like, who cares? Okay, you haven't even begun to sell off. And that is one of the most critical points. Because if you're looking at this marketplace, you're like, woo, got through that week and, maybe only a little bit scathed. Okay, you haven't gotten through anything. You literally haven't gotten through anything. All you're still seeing is the rotation game. And tech is so heavy, it's so market cap weighted right now that when tech does have any selling, okay, it damages the S&Ps. Like last week, again, I make the point, last week, like most of your major sectors last week were getting decimated. That was the theme last week of the video. Most of your major sectors last week are getting decimated. But last week, tech was up. There's some tech earnings, right? Tech was up. Stuff like Amazon carried the whole market last week. Yay, Amazon. Okay. Yay, Google carried the market too. And yet everything else was down. This week, okay, all of that little stuff again kind of rallies back. And yet tech, okay, it takes a bit of a hit. And as tech starts to take a bit of a hit, doesn't matter. Everything starts to slip. But you haven't seen, okay, is sell side. You have to have kind of indiscriminate sell side activity. You got to feel like there isn't anywhere to go. And we're nowhere near that. Just absolutely nowhere near that. And that's the most critical aspect of this. That doesn't necessarily mean, and I'm not here to scare anybody, that doesn't mean that we have to go into a tirade of sell side activity in the next week or two. It doesn't necessarily mean that. But it does definitely mean that if you think that this is selling, okay, you don't even know the marketplace yet. All right. You're living in like Disneyland and you're going through the small like world. Okay. And it's not real. You haven't seen real selling yet. That's important. Okay. Volatility. It's still fairly ugly. And I say fairly ugly. The volatility has still been projecting to the upside. Now, I mentioned this last week. I continue to mention it this week. Volatility, it spiked today, it already contracted a little bit, but we're still in a very ugly place. Why such an ugly place? The VVIX is still clear, okay, over 100. We're at 106 VVIX right now. The volatility futures are still pretty amped. I know a lot of people look at VIX, okay? The VIX is still absolutely in an uptrend, but I'm going to show you another take of VIX. Let's see something interesting. Even the VIX options got surprised about the amount of risk this week. So it's a totally different take on VIX. Most of the time, I don't look at VIX because VIX is, kind of my predecessor's, volatility indicator. But there's a really interesting look at VIX, and it's the VIX options marketplace, okay, is being depicted by expected move. And even the VIX options marketplace, it got it wrong. We actually shattered the upside of the expected move, even in VIX. That's a little bit scary, okay? Because even volatility got caught by surprise a bit this week, and that's the exact point. The other thing that is interesting, it hasn't really gotten crazy yet, but the other thing that's interesting is when we start looking out, okay, at volatility into the future, it's still rather elevated. And as I said, this is kind of the ugly picture of volatility. We're still projecting substantially more volatility in the future. We're absolutely, though, still in what is termed contango. What does contango mean? It means that near term, okay, near term volatility is still considerably lower than longer term volatility. But you start looking like 75 days out, it's wild. Like January holds a hell of a lot of volatility. There's, what it basically says is by January, we're not expecting, like right now we're in a 20 VIX, but like by January, there's still like, 21 vol, okay? 100 days out, you're almost at a 22 vol. It is, again, very obscure. The volatility remains relatively high. It's what I would call kind of an ugly volatility picture. And the most interesting portion of that is the volatility picture that's ugly isn't necessarily right here, right now, okay? It just continues to project more and more risk moving forward. So for those of you who are like, things are going to calm down, man. We're going to go into December and it's all going to be okay. And Santa Claus is going to rally me, okay? Right off into the new year. But the marketplace isn't saying that. That's all I'm trying to point out. When I say volatility is ugly, I'm not trying to, scare anybody. But like, look, there's a lot of volatility packed in back here. I know, of course, somebody's going, well, this can happen and that can happen. Exactly. A lot can happen between now and even like the end of the year. It's still projecting a huge amount of volatility versus like I mean, this is not exactly like, Mr. Toad's wild ride in terms of risk. Okay, he's had a couple of sell side days put back to back. All right, it's not over yet. It's still 20 minutes left in the trading day. Okay, the thing that does scare me though, and the one thing that should scare you as well, is that picture I showed you. S&P is down 1% with a 50-50 advanced decline line. Should scare the crap out of anybody. All right, moving along. Quick volatility update. Bonds. I told you bonds. Bonds last week were at a critical kind of juncture. They mellowed out. Okay, it's not over until I say it's over. The bonds from last week to this week, they literally flattened out. The interest rates have not continued to burst to the upside. We had a scary moment earlier this week, but the bonds, they've kind of mellowed out for right now. Nevertheless, they need to be on your radar because once you forget about them is when the interest rates are going to come rocking back. By the way, what you're looking at over here is a 10-year. This is the TNX, okay? This is the 10-year interest rate, and the 10-year interest rate came soaring up last week. And, the Fed, of course, cuts rates, and the interest rates do nothing but go up. It was a very threatening posture, and we kind of, as I said, we kind of just mellowed out a little bit this week on interest rates. Keep it in the back of your mind because the second you forget about it, okay, I still think we're going to hit easily 4.2%. Even on a government reopening, they're going to reopen the government. And when they start reopening the government, it's all right. We're going to continue to spend and spend even more because that's what it's all about. Okay, so the grift goes on. They continue to spend more, and eventually interest rates could explode in our face. Okay. Also wanted to mention this. Last week, I made a pretty bold statement, and the bold statement last week was that crypto was going to crack. Well, guess what? Crypto did crack. I think it's still going to see some sell-side activity. Now, I was bringing up Bitcoin. I was also bringing up BITO. But crypto as a whole is under duress right now. If you look at like BITO, huge breach. Okay, BITO, by the way, is an ETF. Okay, not to necessarily Bitcoin. ETF related to the Bitcoin futures. There is as I said, there was selling last week, but we kind of recovered. I expected this week a huge breach lower. We got the huge breach lower. What I would look for at this point in the crypto market, maybe even this weekend, you're going to get a rally back in crypto. Okay, look, it's inevitable. We are in short-term, pretty horrendous oversold territory. This may actually already today be part of the rally back. We rally back, maybe even come back to 108, okay, and then start to see some more precipitous sell side activity. In no certain terms over here, I'm not going to get in too much detailed, okay. Crypto is going to see more sell side activity. I can't tell you when this one's actually going to be over, but I can say I think we'll easily be in the low 90,000 range in crypto within the next couple of trading sessions, maybe 10 trading sessions at most, okay, with a precipitous breach. That is actually going to bleed back into the S&Ps, meaning that there's a correlation factor obviously in play. So at this point in time, look, people already realize, and I've explained this in previous videos, there's not a lot of shorts inside of crypto because the product itself, like real Bitcoin, it's really hard to short. A lot of leverage involved. It's kind of insane. And there's a huge amount of margin involved in it. So there's a limited number of shorts, and shorts really help support the marketplace. So when you see selling going on in Bitcoin itself, okay, those are people that actually hold Bitcoin and they're selling it. Okay, there's just no question about it. They're selling it. In fact, some long time Bitcoin holders are starting to get out of positions. And what's kind of cool about Bitcoin though is you can actually track people's positions back. Okay, stuff that was bought like at 10,000. People recently, there was a huge block of Bitcoin that went through. The original and the entry price was in like the 10,000 mark. I saw another one. It was even before that, but it was somebody that entered in right around 10,000. It was a big block. Okay, and they blew out. Okay, right in and around where we are trading now, between 102 and 104 is where they actually blew out of it. And I find that stuff quite fascinating because that speaks volumes. There's some clarity there in terms of like price point, and that speaks volumes. So you have some real sellers in this marketplace. Okay, I'm not sure though it's generated real fear. And those that are in the crypto marketplace are right now, okay, it's a bear market. It is a bear market out there. This thing hit 127. It's trading 100,000. You're in a bear market inside of crypto. Okay. I just don't think that we've seen that real burst lower. Like I haven't seen an explosion of volatility, the burst lower in the marketplace. That is possibly forthcoming. As I said, breaching and breaking all the way down to like 90,000 inside of like the next 10 trading sessions looks pretty reasonable. All right. Last but definitely not least, let's get to the SPX. The SPX, okay, as I said, it's trying to claw its way back to the lower edge of the expected move. I'm not surprised. I mean, that's why I talk about these expected moves week in and week out. Like if you look at some of the close from like 2 weeks ago, we closed on the upper edge of the expected move. We're reaching for expected moves week in and week out. Okay. Like, am I at all surprised if we close in and around like 67.35? No. Okay. We're close enough. It's a $6,700 product. Okay. And, I draw a line on the screen and we close on it. It's absolutely ridiculous. In the SPX, this week we just went through, we had $106, okay, anticipation of movement. So expected move equals plus or minus 106. So we passed through the week. Did we have the $106 move? Absolutely. In fact, we even faced, as I said earlier, almost a 2 standard deviation move. That would have been awesome. Okay. So we were right on the brink of a major breach. Okay. And right now I kind of feel like pulling it back together. Come on, there's 12 minutes left. It could still happen. What are we looking at next week? So as I said, okay, kind of earlier, volatility got ugly. It is ugly. And it's that future volatility that's ugly. But this is kind of tipping its hat a little bit too. Okay, what's that? So we just passed through a week that had $106 expected move. Next week, we're already looking, okay, around 130. Put on your big boy pants. We're still in volatility here, okay? Absolutely still in volatility here though, but we're facing, even with the rally back, still $130 of expected move, okay? And that's with or without the government open. By the way, the government open, that's buy the rumor, sell the news. We'll see how it actually plays out. As I said to you, maybe they reopen the government, the bonds start to sell off, interest rates start to spike higher. Things are getting crazy out there. But the biggest takeaway, as I said to you, that advanced decline line bothers the hell out of me. It's still 50-50. The advanced decline line's 50-50. The market rallied back like 70 points from where it was. It's wild. There's no correlation in sight. Until there's correlation, any real selling, it has yet to even begin. Thanks everybody for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.